Welcome to TradeTheMBI.com. This is John. This report is for the 7th of August, and well, what we have here would be considered a Delta V reversal beginnings. That's where we had this massive dip, gets bought back up. Only one thing, it's got to climb all the way back to this capitulation dip opening right here, which would be right around the 33 level. 29.33, that would be the dipping short ABM. We'll see if it gets there. I mean, you've got short-term buyers certainly have popped back into the equation. Improvement from yellow's shakeout, but it's still below blue. That's never really a super strong situation at that point. So it's got some work to do. I mean, we hit our positive extreme we were looking for. We haven't filled the dip below the red line, which is the way down here, but like I said, it's not going to happen all in one filled swoop. It was surprising that we filled the positive extreme in the one swoop, but it had a little help. Usually it takes more time than that, and oftentimes you get bouncing back and forth, but nothing in this is buy configuration yet, so we'll see if it's able to turn into that, but I'd still look for short opportunities that pop up within the chart, but doesn't mean that you still can't go with small intraday longs that fit in between, because you do have the short-term buyers, and it's about to cross over. If it crosses above steel, that will give it more impetus to keep moving. So that's worth noting. No objection to that whatsoever. And from a euro standpoint, they got back up to that 50%, which is coincidentally right where the market is for the dip down. It's come back up and retracing our 50% level. And from a euro standpoint, this currency wars, there's not going to end. The Fed's going to keep pumping back in to try and keep it from breaking down below these levels, because it gets scary for them. And they break into, below 110. It gets problematic because you can have all sorts of things go on from there that are never good for the U.S. side, particularly when it comes to trade and when you're talking about a currency war. Of course, you have that other fundamental of Brit exit and what that means to the euro. There's all sorts of negatives, I think, for the EU more than for Britain, but conventional wisdom is like, oh no, it's horrible for Britain. It just doesn't make any sense that it would be. But then again, I disagree with most of the economic projections for people, and been on the right side of it, so I don't know what that's supposed to say, other than maybe they just really don't know what they're talking about because they seem to ignore some obvious details. Again, our understanding about oil in that situation has been pretty obvious. We didn't expect it to climb, which means inflation was never a factor going into the beginning of the rate rises that the Fed wanted to protect against, which only created more dislocation rather than anything. Actually, increased budget deficit was the worst thing that it did. Other than that, it really had just a slowing effect on the economy, just as it was ramping up. This gold situation, that's a whole different issue, because this is talking about this long-term systemic reality that eventually all of this monetary easing will squeeze to an eventual hyperinflation, or at least some type of inflationary node, coupled with the concerns about fiat currencies and the amount of debt that's being accumulated by all countries all around. So, whoa, this gets to be a busy chart here. We had the early dip, nice buy signals that came in. We were talking about this meeting point right here, the green with cyan, but you didn't quite have the steel dip below, and at that particular point what we're looking for is the continued rise of DOC red for a continuation, in which case happened until it kind of failed right here, but it didn't meet the sell requirements within what I set up for the Diocon paint, only to have it turn around and create the new buy, because we remained relatively positive on the shakeout along with that rising gold. That led to a whole new run of the shakeout, which started the wave. And then once we were up there, the DOC spreads that came in, we were well over plus 25 at that point, so not really a factor there. By the time we did get back to the zero confluxion right here, this was always the toughest spot, because it's just kind of a noise segment where you don't have enough movement of any particular algo to set things apart until you get the separation, which occurs here. And we did get the dip on that. It just produced a turnaround buy setup pretty darn quick. And that led to new highs and a continuation upward throughout most of the rest of the session. We had an extraordinary amount of volume because even after the rise, we ended up starting to get a little more choppy as we went through, which is a little unusual because typically when you have that kind of a bull run day, you kind of remain at the highs. This one dipped down quite a bit from there, which was fine because it came right down to this previous algo level, and then it became the 2870 and 2880, which were previous lines from before. And then we created a whole bunch of new ones that were pretty close to the same level. Because you had the positive extreme right here, which was 69, so pretty darn close. Didn't even feel like changing it at that particular point. Some of the others had already been filled, same with the dips below the red lines, so they weren't as relevant. But as it came around, we ended up with late evening DOC spread as it was coming down. I ended up covering this before I went to sleep because I was satisfied with that 2870, even though it was still looking a little weak at that point. And it was a good thing I did because you could still see that there was some bounce power that was taking place between the algos. This one didn't even make it back down to the 2845 before bouncing back up again. So kind of in line. I mean, we're just looking for major values at this particular point. We got a little bit of positive extreme action that happened again, just slightly above the 2870. So I would still expect a return that's going to take back to that level when it reaches a point where a sell signal might come in. That's getting to be pretty extreme DOC, but if it doesn't fade back all the way, that just means that it'll be, just a little short ABC kind of setup. And then again, we get back to the daily because we're right that 50% number. We should put that out there because it's important. 2881. As long as you're above that, you can be long. And then any dips back below, you'd have to be out and or flip. So that becomes very easy for a transitionary number. So keep that one in mind. Utilize it. I think even the 50K bought this. Yeah, it did, from right about here on the growing 2857 and 54 range. So doing what it's supposed to do, in line with that. As always, though, I will put up anything new and relevant on the Skype chat. But looking good. As always, though, trade well. Talk again later.